Good morning, it's Harvey Jackson. Well, the budget dropped, and of course, more spending. But if you're a liberal, it's less than what they expected from the fall. But it's just unbelievable. The arrogance of these guys. It's just yeah. Anyway, I thought I'd throw this back in here because I kind of like this thumbnail. Carney's fiscal update continues Trudeau era approach to federal finances. Keep spending. You can see here. This is the debt. Just keeps adding. Carney's new excuse for not getting a promised deal, but rushing into something a lot of countries rushed into deals with the U.S. They weren't really worth the paper they're written on. Well, he's been doing these memorandums of understanding with everybody. Yeah, idiot. Anyway, so agriculture commodities are starting to break out a 20-year downward trend. So we'll see if this continues to break out here, which would be fantastic if it would. And that's the complex put together. The just an illustration showing the good to excellent. It's not as poor as some other years as far as the poor and very poor condition. So one rain away, and we're going to start moving on. But we are a good percentage headed in some of those drought areas, and the drought drives the heading early. So, and this is a key time to add bushels is right now. UAE leaves the OPEC and blow to global oil producers group. I would expect Trump likes this because then you can just sell oil as you please, and hopefully more oil on the market when this war ends. That countries like UAE can start pumping out. I also saw an article that it didn't include was the number of Shadow Fleet boats going by England, and Starmer there said that he was going to start stopping them, but it was still 100 some boats, and Putin is just basically laughing at the rest of the world that he can get away with this stuff. Had a conversation with one of my clients about just observable oil stocks, and this kind of gives you an illustration, the oil inventories and on the water, and you can see that there's been like you're starting off at probably the third most before the war. And as you push forward and that area kind of gets choked off, you're going to start pushing into some of these lower values. But you can see that this just-in-time oil inventories is definite a kind of set with a lot more product in the last few years here. India proposes rules to allow higher ethanol. They're even talking to 100% ethanol blends. It's proposal right now. They're E85 already. Quick look at the weather. Some unsettled weather going across. I don't think all the big storms hit like they did yesterday, but I didn't dig into that one too deeply. Looks like there is going to be some moisture in that area. Now, is it going to be in time? Is the question. Just snow. It's getting close there. The dry corridor. You can see that there's some areas here in the U.S. that are of concern. When you look at it as on cattle on feed, holy smoke, it seems like they're all in drought. So no wonder cattle prices stay higher here. Looks like a good part of the prairies is not in any drought condition when you look at that map, but there is some concern right here in the South America rooting zone. So that's where the second crop corn is basically grown. So quick look at the markets. The market kind of broke out. Canola is trading 740 up at 755.30. That's the July contract, and the November contract is 751 up 630. Rapeseed is up $3.25. It's 516. Soybean oil is up a half a penny at 73 cents per pound. Palm oil is up as well. Crude oil, again, closed out below the $100 mark, but back up here at 103.65. And Brent is at 114. Diesel fuel futures over the $4 mark right now. Soybeans trading up $3.75 or 3.75 pennies at 11.93. Upside target is looking at the $12 mark. Spring wheat up 6.5 cents. Your hard red winter is up 6.75 cents. Chicago is up 4 cents, and your corn is up a penny and a half. And the Canadian dollar still slightly down. Crush margins, this kind of depresses me when I keep looking at this here. But $170, $150 crush margins. I don't know if we've ever had this kind of values. Maybe I'll get Brian to maybe talk about that a little bit, because he's able to pull out a chart. It's unbelievable when you look at what last year's crush numbers were, just over $100 to $125 depending on the month. But these are unbelievable crush margins. That's why the crushers are going to have to get going here. So we just passed that decision level. Now we got another decision level just above it here at 766 on the July contract, and that decision level that you made past the first one, and now we've got the tail here at 747 is the next level that the market that is currently trading above and needs to keep going here. Rapeseed made it through that upper level a couple of days ago. Soybean oil, it's been a whole week of trading higher highs here, now trading 73.10. It's a fantastic level. Soybean meal, it's an upward trend. When you look at the soybean crush margin, $3.67, they have not seen these kind of values ever either. $3.67 per bushel for crush margins, and this is the reason why soybeans can't get out of their funk. Oil is going up, meal's going up. Crude oil, no deal, no signage of anything, no sitting down to have any talks. It's just putting pressure on crude oil here. And the question I had yesterday is from actually more than one client that was asking about why the cash price versus the paper price hasn't taken off. Well, because there's world inventories that still can be grabbed. Here we are, New York Harbor diesel fuel trying to get back to these highs here. We're getting close. Gasoline's making new highs on the exchange anyway. Canadian dollar, we had 2 days ago we had a pretty strong up day, and yesterday took it all away. And a little bit lower today. Fed does talk about interest rates here today, and so does the Canadian Bank of Governor as well. Just a quick look at wheat. We continue to get above these previous area. Now we're just shy of, we're 735 right now, and looking for the upside target of 774. We get to there, and then all of a sudden we're looking in the nines. Here's your December contract, and here's your Kansas, and it still keeps on going here as well. Chicago finally breaking out as well with an upside target that is, let's call it 60, 70 cents higher. Milling wheat not making new highs yet. Corn needs a little bit more length on here to just get back to our previous highs that we made back in March, April.